What's up, guys? Welcome back to Everyday Money. It's crazy out there right now. I mean, it's nuts. All the things that are going on in the world, every single thing that seems to be going on right now is negative for the stock market. It's negative for your money. It's driving the markets down, and there doesn't seem to be any end in sight to any of the bad news. I mean, we have war going on right now that's potentially going to drag other countries into that war, depending on how things go. We have inflation that's through the roof. We're still dealing with supply chain issues. We're still dealing with the end of the COVID-19 pandemic. At least I hope it's the end of the COVID-19 pandemic. We're talking about increasing rates. Mortgage rates are going up. There is a housing crisis. There's just not enough houses for all the people that want them. And all of this altogether is a major economic drag on the entire world, and specifically the United States, where most of my viewers are. And so you got to look at what you are going to do with this, because every time that you turn around, there is some sort of dramatic, major thing that's causing markets to go haywire. And I think that a lot of folks need to just take a step back from all of this, because right now what's going on in the markets is anything is triggering a market reaction. Everything is completely right now on news items, emotions, and just the way that people feel. There is very little fundamental analysis going on. There's no fundamental reason why markets are moving in these tremendous fashions that they are, especially related to things with the Russian-Ukrainian conflict in a way it's going to affect the United States stock markets, the S&P 500, the Dow, the NASDAQ, etc. For example, last night I was watching, and I've watched a lot of the Ukrainian conflict, as I'm sure a lot of you guys have, and I watch these things, and then when I see major news items come up, I go over to the S&P 500 futures, because usually when these things are going on, the timing is that the markets are closed for us just because of the time difference of, essentially the other side of the world. And so last night I was watching while one of Ukrainian's largest power plants, the largest nuclear power plant in Europe, was inadvertently or intentionally shelled, and there was a fire there. And I knew for a fact, I was like, if I go to the S&P 500 futures right now, I guarantee you they're down. And they were. The Dow futures were down like 600 points. The S&P was down, 70 or 80. It was just insanely down. And I was thinking, like, why? Other than, that's obviously a terrible thing to happen, to have a nuclear plant on fire. It would be awful if it melted down, and, would create an awful environmental and humanitarian disaster locally to where that is. And there could be some radiation spread throughout the world. But, for us in the United States, in the United States market, it would be an almost non-issue, other than, we just know that it's bad. It's out there and it's being bad. The effects to our stock market from that particular event would be so limited that it's not even really worth talking about. But it created a very large, what is that, 2% or so decline in the S&P 500 futures just on the news of that. And so that's what I want to get through to you guys, is that you're going to be seeing the markets react in insane fashions to any given news item, especially with our 24-hour news cycle that we're dealing with right now, and to not make any moves that are emotional or not based in some type of fact for yourself. And this is the point of the video where I always tell you guys that what I'm saying right now is just my opinion. It's not a recommendation to buy, sell, or hold a stock, crypto, real estate investment, or any other type of investment. You need to do your own research, use your brain, think about what's good for you. But for me, I'm just going to hold the line, and I'm just going to continue to do what I've been doing, just stay the course. Because when you guys are looking at this and you're looking at World War III, and none of us have ever, probably most of my viewers have never been through a major conflict with major world powers that aren't on our side. If you're from the United States, you have been familiar probably with the war in Afghanistan, the war in Iraq, maybe some other minor conflicts that have happened in that time. But we've never seen, for the most part, another major world power invading another country and having this, potential World War III if things kind of just spiral out of control. So the best thing that I can do is look back in history, see what has happened historically with war and the stock market. And now, obviously, war is a terrible thing. It has a terrible human toll. It has a terrible economic toll in the areas where it's fought. it has a terrible toll on the countries and cities. But, for the purposes of this channel, we talk about money. And so I'm concerned about what is going on with the stock markets, what's going on with now, the crypto markets, with housing markets. And so we're going to focus on that today. And so even though some of these things sound, optimistic about war, it's obviously not a great thing. When you look at, like, for example, World War II, which is the biggest conflict that we can really conceive of, in my opinion, when the Pearl Harbor was bombed, the day 2 days after Pearl Harbor was bombed, we saw the markets go down in the United States by about 6.5%. But if you look at the total return of the markets from 1939 to 1945, the markets went up by almost 50% in the United States during one of the most destructive wars of all time. When you move forward to Korea, the first day when the North invaded the South, markets went down by 4.7%, but by 1953, markets were up by almost 60%. Fast forward again to Vietnam, and again, you guys look at these, when you're looking at these are all in about 10-year increments. So, when you're looking at major wars, there's one about, every 10 years or so. But Vietnam in 1965 to 1973, the markets were up by about 43%. So when you guys are looking at your money and looking at what's going on, you're thinking, well, the market's going to crash because Russia's invading Ukraine. It could spiral out of control into World War III. Historically, the markets have always gone up during wartime, and there's a lot of reasons for that, especially in the United States, being that we're geographically isolated. Conflict is not likely on our soil, and we are a major arms producer, and so those stocks that do well during wartime, like Raytheon, General Dynamics, Boeing, McDonnell Douglas when it still existed independently, and all the rest that are involved in wartime production. Oil companies usually do well because the price of oil goes up during conflict, all contribute to the market going up over time. So that's what you can look for over the time of this conflict. If things go the way they have historically gone, is they will continue to go up over time. We have seen markets come down in the initial stages of this conflict, and it will depend on how long it is drug out for what happens with the markets, what happens with the actual war over that time period. Now, when you guys are looking at this and you're thinking, why would the markets continue to go up even though a war is going on, the world's coming to an end, and things are just bad all over? You guys got to get back to looking at what your stocks represent. That ticker symbol that just flies across the screen, that just seems like some sort of abstract nothing, that represents a real company out there that is competing in the real world with other companies, and there are people that are working for those companies, there are people that own those companies that are trying to beat out the other guy. And it doesn't matter if the world is at war. These folks still need to pay their bills, need to put food on the table, need to pay their taxes to support the war efforts. And so these folks still are going to be competing out there to make money. Just because the war is going on doesn't mean that Ford is not going to try to outcompete Chevy, that Boeing's not going to try to outcompete Airbus, that NVIDIA is not going to try to outcompete ATI, and in all of the rest of the things. And that is one of the things that I always look for and to remind myself when the markets are going nuts, is that the things that you are invested in, especially if they are stocks, cryptos are kind of a different story, but stocks and even real estate investments that, because people need places to live, so they have to pay the rent and such, these represent actual things, not just some abstract ticker type of deal. And people want and continue to make money regardless of what is going on in the world, as long as there is not conflict in the areas that they are at, doing their business. I want you guys to click the links on the screen. These are going to tell you all sorts of other stuff about investing in stocks, real estate, cryptocurrencies. If you guys haven't yet, hit that like button for me for the YouTube algorithm. Hit the subscribe button down below, notification bell, so you don't miss anything that I put out on personal finance. I appreciate you guys watching today, and I will see you on the next one.